By the management of the company. We have Deepak Bharuka, CEO at the company, as well as Praveen Sathe, the CFO at J&K India, joining in with us this afternoon. Very good afternoon, gentlemen. Thank you so much for joining in with us. And, the company makes industrial machineries. This is specifically for oil and gas segment. Could you start by explaining us which segments does the company operate in and what kind of market share of these products do they enjoy and what is it over there in terms of the company?
Currently, we are working in the petrochemical refineries and fertilizer segment. And as per F&S report, our last year's market share was approximately 27%.
Okay, let's move on to the next question. And, could you provide more insights in terms of what is the intended use of these proceeds for the fresh issue of rupees 300 crores in the IPO?
See, basically the object of this IPO is to help us with the working capital. So in our kind of industry, the working capital requirement is the major requirement apart from the capex. So these IPO proceeds will be utilized for the working capital requirements as mentioned in the objects of RHP.
All right, but Deepak, coming to you, what is the demand outlook expected for the company's product as ONG upgradation, the capex, gather space, both internationally as well as domestically?
Yeah, see, as far as demand outlook is concerned, we see going forward is a huge demand for the products which we are in. As per F&S report itself, if you see, which is part of our DRHP, global demand is more than 60,000 crore for next 5 years. And maximum demand we expect will come from the petrochemical segment. As you can see in India also, a lot of refineries and PSUs as well as private players have announced their capex plan for the petrochemical segment, and this is where we expect that going forward for next couple of years we are going to get the maximum order booking and the revenue. And on the global side, we expect the demand to come from the fertilizer sector as well as the refining, mainly in the Russia, Middle East and these segments.
Right, Praveen, just overall in terms of the capex plan and the order book, what is the growth guidance there for FY25 and outlook overall going forward?
See, we are currently an asset-light company, and as I told you in the RHP also, we have mentioned that the objects of the issue is for working capital. So we don't have any capex plan out of this issue, and the growth in the revenue as well as the profitability is looking consistent. If you look at our past performance, we see that consistent growth will be there in the future as well.
Okay, Deepak, can you just provide the insights into the company's future plans for the expansion, like both in terms of the geographical reach as well as diversification of your product offerings?
See, company's plan on the geographies, we have already started expanding in the European market. We have done a couple of orders in African market. Recently, we also got some orders in the United States. And we are having quite a huge pipeline bid pipeline in the Russian market. So these are the geographical territories we'll be expanding in next few years. As far as product side is concerned, we are also in the green hydrogen. We are currently executing India's first green hydrogen generation refueling station for one of the largest refinery client in India. And apart from that, we are bidding for a couple of more projects in the green hydrogen segment. Apart from green hydrogen, we are also going into the solar. We are also in the incinerators. Recently, we have quoted for some of the orders in the incinerator market, and we also executed some orders for the flares. So these are on the product side we intend to diversify in near future.
Right, and Praveen, just lastly, we want to know in terms of consolidated margins, how is that, what kind of consolidated margin profile does the company have? What is the outlook that one could expect for FY25? How are the margins expected to trending over the last couple of years, and the outlook going forward?
See, on the margin front, we have been very consistent. Our EBITDA margins have been consistently at and around 18% for past 3 years. And our PAT margins have been around 11 to 12% in the past 3 years. And that has been consistently maintained.
All right, with this, Deepak and Praveen, we'll let you go on that. Thank you so much for joining us today on ET Now. We will.
If you like this video, then like, share and subscribe to ET Now.